market could fall another 20%, right? And we've now heard that kind of idea. Paul Tudor Jones yesterday said equities were still too high. I mean, we've heard that repeatedly now. Historically, we've told investors and the financial community said, look, if you have a portfolio, it's better off you hold on to your portfolio than to sell things. You're never going to time it right. The question, though, is if you really think that there's another 20% to go, maybe you do want to be in some cash. No?
Yeah, I think it's a tough thing because you're right. A lot of people have gotten the advice like they said, hang on in there, right? So my view on this is that if we get the slight earnings recession, which seems kind of, you know, the worst case scenario to me would be like that soft to medium term landing. Banks are in good shape. Corporate America is in good shape. As you said, the numbers look pretty good. You don't have a 2008 situation on our hands. So that brings you down to like a 3,300, 3,200 level. You know, that isn't a 20% move. I also think that if you're an investor and you sort of don't need the cash today, tomorrow, or 2 years from now, if you sell now and you want to get back into the market, you're more than likely to buy at higher prices at that period of time. So it depends on who you are. If you don't need access to your cash, I would wait it out. You know, historically, if you look at those charts since the 1950s, a year after, say, today or so, the market bottoms out before the economy does, and you see those double-digit returns. So historically, it has almost always been the case that if you stayed in the market, you would sort of get your money back and sort of get to par.
Sylvia, I think
now, if you're a millennial and below,
that's the other sort of historical question. You said 1950s. I was going to say maybe if you started to think about the 1970s, it's clear for the last 40 years that, you know, it's been basically up and to the right for the most part. There's been these sort of, you know, 12, 18-month, 24-month sort of blips. But if you held your breath and you know, 2 years later, everything would be relatively fine. The question is, are we moving into some kind of period where everything is not relatively fine? Is this, you know, the 1970s in which, you know, a dollar in 1970 was not a dollar in 1980?
Yeah, I think that there are a few things that are different. So you know, the investment in sort of innovation and technology and the way that our economy will change in the next decade. You know, there is a lot of sort of demand to create a new world where we have to replace workers to kind of get past this. And, you know, you'll see companies invest in technology, digitalization, and things like that. The consumer is stronger than he or she was back then. Jobs are stronger than they were back then. Corporations are stronger. I do think that, you know, there's enough of things that are sort of different than they were in the 70s. And inflation is, it sort of is coming down. And then if you look globally, too, I mean, the Fed has to sort of consider what the impact of the strong dollar will continue to do to the rest of the world. And you have to think that this can't go on forever in terms of, you know, aggressive rate hikes and perhaps being as strict as they want to be with this policy. So, you know, I do think that we'll probably have that pause and kind of get back to normal, but before not, you know, is that 12 months out? It might be, but I don't think it's, you know, a decade of sort of no growth and no returns in the market. So going back to your question, I do think it's still wiser to stay invested in the market rather than to recognize these massive losses. And if you pull your money out of the NASDAQ now, you're probably losing a third of your investment. That's a tough pill to swallow.
Sylvia Jablonski, want to thank you. And you are right. You have to be.
Thank you.
The saddest part about all this, when you have to market times, you have to be right twice, right? You have to be right about getting out.
Yeah, absolutely.
And then you have to be right about getting in again. Thanks again. Appreciate it.